Hey everyone, this video is for PFIN Chapter 8. I'm just going to do a quick summary of the Chapter 8 slides. Just bring them up here. Okay. So Chapter 8 is looking at insurance, focusing on home and vehicle insurance, which I'm sure most people are quite familiar with already. So I'll try and keep this short. Starting out, insurance and risk management. Insurance is protection against possible financial loss, and more than just financial, I guess, too. An insurance company or insurer is a risk-sharing firm that assumes financial responsibility for losses from an insured risk. Pretty straightforward. I think everyone's kind of familiar with all this already. People purchase a policy, which is just an agreement, a contract with the insurance company, and the firm assumes a risk for a fee called a premium, so insurance premiums. The amount of money a policyholder is charged for an insurance policy. Insured is a person covered by an insurance policy, and a person who owns an insurance policy is a policy holder. So if anyone's driving a vehicle or has tenant insurance or home insurance or life insurance or anything like that, you are the one insured, you have a policy, and your premiums, that's the fee you're paying. Types of risks. Most common risks are classified as personal risks: loss of income, premature death, property risks, and liability risks. So some of this stuff we've already discussed largely in law class last semester, so you'll recognize some of these terms. Risk of change or uncertainty of loss. Peril, you've probably heard this term before, is the cause of possible loss. So things as fire, such as fire, windstorms, robbery, disease, or death, things that are going to cause loss of life, financial loss, whatever it may be. And then hazard, something that increases the likelihood of a loss, such as driving drunk, smoking in bed, or defective house wiring. So you may have your home burned down, and having defective wiring creates a greater hazard for that. Types of risk include pure risk, which is a risk in which there is only a chance of a loss. It is insurable, accidental, unintentional. Nature of risk can be predicted. The second one is speculative risk. It's the chance of a loss or gain and is uninsurable, such as starting a small business or gambling. So, of course, you can't take out insurance for gambling, and if you lose money gambling. Risk management. So it's a long-range, organized plan strategy to protect your assets and family. That's typically why you would buy insurance, life insurance, home insurance, tenant insurance, that can reduce financial loss and improve your chances for economic, social, physical, and emotional well-being. Some risk management methods. Risk avoidance, a pretty obvious one that most people implement daily, whether they think about it or not. Just avoiding issues like avoid a car accident by not driving to work. So just by taking the bus or taking the subway or something, you are avoiding risk by not participating in risky behavior. And even though on average there's not a lot of car accidents for most people, it is still a leading cause of death when you look at causes of death among whatever Canadians or whoever else. Risk reduction, so that's reduce the chances of loss occurring or reducing the adverse effects of loss that occur. So installing smoke alarms or fire extinguishers, wearing a seatbelt to avoid serious injury if you are in a car accident. So you're not completely avoiding risks, but you're implementing ways of reducing the risk. So if you're in a car accident, serious car accident with no seatbelt compared to having a seatbelt, hopefully that seatbelt is going to reduce the risk of serious injury or death. Risk assumption, so that means taking on the responsibility for loss or injury. To self-insure, the process of establishing a monetary fund to cover the cost of a loss. And risk shifting means to transfer the cost of the loss to an insurance company. So that's why people would be buying insurance, is they're shifting the risk. You know, if they get an insurance policy and they're just paying their premiums and something happens, all the cost of the incident, whatever that may be, is going to fall on the insurance company, assuming you have the proper policy and you have enough coverage. So here, just from your textbook, a chart, examples of risk and risk management strategies. So for these personal events, you can read through these in more detail if you want to. Disability, illness, death, retirement, property loss, liability. Oops. So the events, the financial impact they could have, personal resources, private sector, public sector. Personal, just steps to personal insurance planning. Set insurance goals, develop a plan to reach your goals, put your plan into action, and check your results. Kind of like we covered a lot of things. Not everyone's going to follow these steps exactly, but kind of useful just to know of a method. Planning your insurance program. Step 1 is set your insurance goals and prioritize them. This really depends. I mean, sometimes you don't really have an option, like when it comes to vehicle insurance in Saskatchewan, we don't really have a choice, so you don't have to go through all these steps. Whereas with home insurance, I mean, you should have it, but it's going to vary a little bit which policy you would go with. So you would want to set your insurance goals, consider additional expenses, things like that. You know, really take into consideration your situation. If you have life insurance, do you have kids, things like that. Step 2, develop a plan to reach your goals. Step 3, put your plan into action. And step 4, review your results. Oops. With home insurance, the main risk related to homes and automobiles are property damage or loss. Obviously, with vehicles, that would be, you know, getting in a car accident or whatever, you're damaging or potentially losing the vehicle. Same thing with a home. And the other thing there is your responsibility for injuries to others or damage to property of others. So whether that's a vehicle or a home, something to be concerned with there. If you hit someone with your vehicle, injuring them, or if they get injured at your property, or if you hit someone else's vehicle with yours and doesn't do any damage to yours, but does damage to theirs, or you start a fire on your property that doesn't really cause any harm to your property, but it burns up part of the neighboring house, you know, that would be your responsibility to damage to other people's property. So property and liability insurance, again, insurance, these are things that we've covered in law class, so you should recognize them. Liability, that's the legal responsibility for the financial cost of another person's losses or injury. So that's when you're responsible for someone else's loss. Negligence, the failure to do what a reasonable and prudent person would do in a given situation. Strict liability is present when a person is held responsible for intentional or unintentional actions. And then vicarious liability, another one you'll recognize, is when you're held responsible for the actions of another person. So, you know, that even could be your kid. If your kid, if you have a minor, they're not a legal adult yet, and they do something to cause financial loss or damage to property or something, you may be vicariously liable for their actions. Homeowners insurance coverage includes physical damage to property and the loss of use of property, buildings and other structures, additional living expenses, personal property articles, personal property endorsement, and household inventory. So with this, the first one there being pretty obvious, like physical damage to the property, you know, if there's flooding, fire, whatever, tornado, something like that causes physical damage, an insurance policy, an appropriate insurance policy would cover that. Building and other structures, so you might have, you know, whatever, children's kind of swing set or playground on your property, or a swimming pool, or chattels or fixtures, as we talked about in law class, that could be included. Additional living expenses. So that just means like if there is serious damage to your property, you may not be able to live there for a while. You might have to rent somewhere else while that's being repaired. So insurance policies may cover those type of expenses. And then personal property and articles. So within a property, besides having the physical structure and maybe a shed and a swimming pool or whatever, you're probably going to have things like clothing and electronics and jewelry and maybe money and whatever else that you want to be covered under your insurance policy. Personal property endorsement. So as I was just saying, with personal property, usually most insurance plans just kind of have like a general coverage for personal items, but you can do what's called personal property endorsement if you have really specific valuable personal items. Like if you have really expensive jewelry or something, you might want to get that endorsed in the policy just to make sure that you have enough coverage for that item that goes beyond what the basic coverage would be. And then household inventory too, the same kind of thing. If you have specific items of value in your home that go above what the generic coverage would include, you'll want to make note of that and negotiate that, or find a policy that allows extra coverage for that. Just kind of a breakdown of like home inventory. I think pretty obvious stuff. Lawnmower in the garage. Family room, maybe you're having books, bookcases, things like that. So when it comes to homeowners insurance coverage, how much you're being insured, there's different methods to determining that. There's different types of policies. One key way that homes will be insured would be looking at the replacement value of your home. So what does it cost to rebuild that property? Limit of insurance purchase should reflect the cost to rebuild your home, not its current market value. So if you have a home with a current market value of $400,000, the replacement value is probably not going to be $400,000. And when it comes to home insurance, one of the main reasons for that would be because if your home burns down or there's a flood or something and you have to tear it down and rebuild, part of what creates the current market value is the land itself. And if your property burns down, you're not going to burn the land to the point that it doesn't exist anymore. So you're not having to pay the full market value, just the replacement of building the actual structure on the land that's still going to be there. The other method there is depreciation value. So that's a reduction in the value of an object based upon its age and the percent it is decreased each year. That might be more suitable for like a vehicle that's actually depreciating. Typically, property, especially like physical land, does not depreciate, whereas housing sometimes does lose market value and can depreciate with time, but typically home values do go up. Homeowners insurance coverages, things like liability coverage, so that protects you and your family from financial losses resulting from legal actions against you due to damage to others and their property. Includes the cost of legal defense, involuntary medical payments, and voluntary property management. So again, stuff we've kind of already covered in law class. If you are liable, you can have homeowners insurance that covers you for that liability of financial losses resulting from legal actions against you. So if you cause damage to others and their property. An umbrella policy, just a form of home insurance, also called personal catastrophe policy, supplements basic personal liability coverage, $1 million or more in liability coverage. So kind of just covering a broad spectrum of things. Next thing is tenant insurance. So we just covered back here homeowners insurance. So that's if you're actually the owner of a property, whereas if you are just renting a property, you would want to get what's called tenant insurance. And again, this is probably something everyone is or should be already familiar with. If you're renting property, you should probably have tenant insurance. A lot of landlords will require you to get tenant insurance. they may have homeowners insurance for owning the apartment building of some sort, but that's not going to cover everything that you want to be covered as a tenant. So personal property loss or damage, personal liability. So for the first one there, again, if you're just renting an apartment, maybe the landlord has insurance for the building, but that's not going to include insuring your laptop and your clothes and your jewelry and whatever. So you want to have tenant insurance to cover the contents that you have within that rental property. Personal liability, the same thing. Like if you do something wrong, if you have someone over and they suffer an injury or whatever in your place, or you do damage to the building that extends outside of your suite, if you're in an apartment building, you'll want that personal liability insurance. Additional living expenses, the same as what I mentioned in homeowner insurance, where if you flood your apartment or your townhouse and you need to live somewhere else while it's being repaired, a tenant insurance package can and should have some coverage for that to pay for your additional living expenses. Landlord's insurance won't usually cover personal belongings, as I just said. Yeah, moving on here. Common combinations of coverage include, so just a few standard, broad, comprehensive. So the standard named perils coverage. So as I covered in the earlier part of the chapter, perils are like the reasons for the damage, whether that's flooding, fire, or whatever. Broad is just all risks, and comprehensive is all risks. Personal property, same thing. So yeah, there's just different options that you can go about, and that would depend on a lot of things, like how much insurance you want, where you live. Like where we live, earthquake insurance is probably not necessary. Maybe fire and flood is more important, whereas if you live where I was staying in Taiwan, where there's lots of earthquakes, you would probably want more earthquake insurance. Just another section from your textbook there. Certain personal property is specifically excluded from the coverage provided by homeowners insurance. So that might be important to look at, things like motorized land vehicles. Certain insurance policies won't cover those, others will. Next thing is deductibles, which I'm sure everyone is a little bit familiar with, especially from vehicle insurance. So deductible is your share of any claim. The fixed amount indicated on your policy. The higher your deductible is, the lower your premium, since the insurance company is responsible for less of your loss. People are generally more careful if the cost of being careless is higher, and fewer small claims means less administrative costs for insurers. So even like with SGI insurance, the standard deductible, I believe, is $700, but you can get an extra policy or alter the policy a little bit to make your deductible lower. But I believe if you get a lower deductible, you're having to pay higher premiums. People are generally more careful if the cost of being careless is higher. So meaning, like, if you're the higher your deductible, the more careful you're going to be about not getting in an accident or causing any damage. And fewer claims means less administrative costs for the insurer. So how much coverage do you need? Really depends on you and your situation. Determine what it would cost to replace or rebuild your home, and purchase a limit of insurance equal to this amount. Have sufficient liability coverage, include protection for specific items such as collections, cameras and jewelry. So again, like I was mentioning in a previous slide there with personal property endorsement, you want to make sure that it's going to cover your personal property. Determine the value of the contents of your home inventory. So yeah, replacement value of the home, value of contents, liability coverage, protection. So this would be like the personal property endorsements to allow some extra provisions in the policy to account for some specific valuable personal property that you may have. Factors that affect home insurance costs, location of residence. So whether that's region, province, whatever, it's going to have an impact. Type and age of the structure. Your textbook talks a little bit about this stuff more. I do recommend reading the textbook for more information, but things like, you know, how your home is built. Is it concrete, brick, or is it wood? So if you're in a high risk area for fire or something, maybe the policy for a wood home is more expensive than a concrete building, because a concrete building is not going to burn down. Whereas if you're in an earthquake type prone area, maybe wood is better than brick house or whatever. So that could impact it, and the age as well. If you have a really old home, it's not going to be able to stand up as well to natural disasters. Replacement value, electricity, heating type, plumbing, age of roof, other factors, alarms, pools. So insurance companies are going to take a lot of these factors into consideration when they're determining an appropriate policy and how much your premiums will be. Reducing home insurance costs, like things like having an alarm system, smoke detector, car insurance, things like that can reduce the cost of your home insurance. Automobile insurance, all provinces and territories require mandatory automobile insurance. Definitely the case in Saskatchewan, right? We can't drive legally without having an insured vehicle, and we only have one supplier of vehicle insurance, right? We have to go through SGI. Covers risk associated with owning, operating. That should say owning, not owing. Or using a vehicle. So liability to others for injury, death, or property damage, injury, death for yourself or your passengers, and damage to your vehicle, which again, I'm sure everyone's pretty familiar with, especially if you drive a vehicle. Your SGI insurance will cover injury, death, or property damage to other people, to yourself, and damage to your vehicle. And then again, you'll have the deductible to pay. Some more information here on automobile insurance coverages. Fault is determined in every accident for the purpose of premium calculation, and each driver collects from their own insurance company. You've probably heard the term like no fault insurance before, and that just means you'll collect insurance regardless of who's at fault. Varying province to province. Just some more information on automobile insurance coverage, the risks and coverage. Bodily injury coverage, so that's pretty obvious there. Bodily injury, accidental benefits, property damage, damage to the vehicle from collision, things like that. What else? Automobile insurance coverages, property damage also includes towing and emergency road service, depending on the policy. Loss of use of coverage, replacement transportation costs, depending. You'd want to look into your policy. There's an interesting company name there for this towing company. Next thing is automobile insurance costs. So factors that affect the amount of premium you pay include liability limits, accident benefits, the automobile itself. So you guys have probably noticed if you've insured vehicles before, the price of your insurance, like the premiums you're paying with SGI, does largely depend on not only you and your history, but the vehicle itself. You know, antique vehicles are cheaper, newer vehicles can be more expensive. Yeah. Cost to repair or replace, make and model, style, vehicle, safety record, not color. Some other factors affecting the amount of premium include the use. Is it for work, for farming? You know, maybe for for certain types of businesses, or farming might be higher risk. Rating territory, driver classification. So this seems to be more of a thing in Alberta as well, where it sounds like younger males have higher insurance premium just for being younger males. not necessarily discrimination. I think it's just that younger males are more likely to have car accidents. Therefore, they want to transfer more of the cost onto that demographic that's has a track record of causing accidents or being in accidents. Last slide for this chapter. Reducing automobile insurance premiums. Find out how much it will cost to insure a car before you buy it. I'd say that's kind of important. Like, you can look that up quite easily on the SGI website. Compare companies. We don't really have that option in Saskatchewan. As I said, we're pretty much stuck with SGI. Other provinces, other countries, you would have different options that could be important. Yeah, establish and maintain a good driving record. That's obviously important, especially with the system we have in Saskatchewan. Install security devices such as car alarm, and if you have more than one vehicle, insure them both with the same company. Again, we don't really have that option. We do have more freedom with things like life insurance and home insurance, but with vehicle insurance, we're pretty limited to what SGI offers us. But yeah, anyways, just thought I'd quickly go through that chapter 8. Sorry if it's a little bit rushed. I don't want to make 2-hour videos. But anyways, as always, just reach out if you have any questions on the chapter or on the assignment that came with it. And yeah, feel free to subscribe videos. You'll see the post notifications when I post videos. That's it for now.